Hey guys, Lance Martin, Coldwell Banker Town & Country. Welcome back. It is our June market snapshot. Our 2024 real estate market forecast continues, which we just wrapped up. Hopefully we had a few of you there. Again, I am Lance Martin, your host. You might notice a little bit of a new background. That is Cal Baptist University, where we just had our forecast. Mad thank yous out to everybody over at CBU for providing the venue and helping us with the sponsorship, along with everybody else who helped. If you missed the forecast, this was our slide, but the slide I thought was up next is our QR code. That actually takes you to the Lance Martin link tree. Click on that. I think it's the second or third link down. You can go to the market forecast link tree. Everything is there. I think there might be one or two videos that we still have yet to post, but they're just kind of minor, kind of cleanup compilation videos. But at any rate, we had a really great time. Again, thank you to CBU and all the sponsors that helped us out. If you missed the content, go there and check it out. We'll give a little bit of a wrap up here, but not too much. So let's jump into our Inland Empire or Inland Southern California snapshot. So let's start where we always start. Sales prices. This is the chart that we start with. You kind of got a little feel about me. Things are different. Things have changed since our last snapshot. So this is basically our prices. Good news, bad news things. So let's kind of go through it. All four counties that we've been monitoring have shown an increase in median sales price from May 2024 to May 2023. I've got May 23 isolated over here. I'll just pick one of them out. How about LA County? LA County median price, goodness gracious, over $1 million. Wow. A year ago, just over $900,000. According to the math there, it's about 11.2% increase. 13.3% increase in Orange, 4.5% in Riverside, 4% in San Bernardino. Even though these numbers are smaller in Riverside, San Bernardino, I like them better because 4% is just fine. We can do really well with 4. 13 in Orange County. I mean, if you're in Orange County, I suppose if you own a house, you like 13%, but nothing wrong with 4. So this is the interesting part though. If you take a look at the prices, if you remember last month, I have my little 3 out of 4 counties. And over here, it said all-time high in the median sales price. If you don't like median, I could throw average. It didn't matter. All-time high in the average sales price. Well, not that it's a big deal, but what a difference a month makes. So now I still left my 3 out of 4, but instead of 3 out of 4 at all-time highs, basically we had a little bit of a pullback. So now we've got 3 out of 4 of our counties pulled back a little bit in median sales price in the month of May. What does that mean? I don't know. Honestly, I wasn't actually expecting that. So we'll come back to what that means, if anything. It might not mean anything. It might mean something. But I got to tell you, it surprised me. And when it surprises me, that makes me look at the data a little harder and say, okay, is there something going? Because we don't really do a forecast here at the snapshot. I basically am kind of doing more of a trend analysis. And when I see a trend that does something a little different than what I expect, then I want to go back and say, well, did I miss the trend? Maybe I wasn't paying attention to the trend as closely as I thought. So at any rate, 3 out of the 4 counties, the prices are still fantastic. And if we go back a slide, they're still up double digits in Orange County and LA County from a year ago, and basically 4.5% in Riverside, San Bernardino County. So that's good. But I mean, heck, if you want to say, well, what did they do last month? Well, they pulled back a little bit. The only county actually that did not pull back was LA. Orange County pulled back a little bit. Riverside, San Bernardino, very slightly, but anyway, slightly nonetheless. So that's our 15-year pricing chart. Supply and demand. Again, I'm thinking pricing when I look at supply and demand. So in theory, well, if prices pull back, well, maybe supply went up. More properties to look at, all the rest of that sort of stuff. Well, we kind of got a little bit of a mixed bag, and we can get a little deeper into these charts here in a minute, and I will. We'll talk about what the new listings came and the active listings on the market, what they did. By the way, there is a difference between new listings and active listings. I know we've been doing these snapshots for a couple years, 3 years now. I'm not sure I've spent a lot of time. New listings are exactly that. How many new listings came to the market in the month of May? Active listings are the total of number of listings. So we'll talk about that, and is that distinction important? I think sometimes it is, other times maybe not so much. But as far as new listings are concerned, LA up, Orange up, up and up. So again, double digits up in Orange County and San Bernardino, 14% and 11%, and 4% in Orange and 7.2 in Riverside. So a little bit more listings, that's fine, but but by the way, that's year over year. I mean, you got a little bit of a pullback here in Orange County, kind of flat a little bit, maybe a little bit less in Riverside County, up in San Bernardino, and up ever so slightly in LA. But these are the numbers. I'm not going to spend a whole lot of time. The new listings are up a little bit. Let's just, for argument's sake, say that's a good thing. Now, this is the 15-year chart, and I do want to get a little deeper into that. But if you look here, 3 out of the 4 counties that we track pulled back with new listing count in the month of May. Is that a big deal? Well, I don't know. Okay, I always hate to do this because I got to get my glasses out when I look over here. So if you were to click into that chart, this is your new listing chart. Let me see if I can get this to expand a little bit. It's not cooperating with me. There we go. That's a little bit better. So all I want to do, and you guys can click on this. So when you're watching the video, depending upon where you're watching it, YouTube or Facebook or whatever it happens to be, generally there's a link in there. Click on the link. You can get this slide deck. You can click into these charts. These charts are updated in real time. You don't have to wait for me. So when you get to June 1st or June 10th and you're waiting, or July rather, and you're waiting, hey, when's Lance going to do his next snapshot? If you save this link, you can go in and you can pull this data. You don't have to wait for me. It's basically updated more or less in real time. So what I'm looking at here, what I wanted to share with you though, and this is current. I mean, over here, this one, it's a 15-year chart, so it's a little hard to see what's going on. But the listings pulled back, nevertheless. All I want to do is I want to go back and find the high marks. So if I go back to 2023, listings peaked in May. I might be off by a month or two, but it looks like I hit the number pretty quick or pretty clearly. So did listings peak in April or May this year? Well, maybe they peaked in April or May, depending upon which county. Last year they peaked in May. Okay, what does that mean? I don't know what it means. How about if we go, what's this high mark here? Well that's, oops, that is, if I can get my finger on there. There we go, June. So in 2022, they peaked in June. I'm just gonna randomly grab a couple others. Let's go back, what is this? This looks like May of 2018. That looks like May of 2017. How about what's this one? June of 2016, June of 2015, July of 2014. So if you go back and you take a look at this, when I got into the business 30 years ago, listings peaked sometime in August, and then they slow down in September. That's been changing. They've been peaking earlier and earlier. So if we go back, is it going to be June? Is it going to be July? But the last few years, it's been in May or June. So it's not crazy. Just for giggles, if you want to come all the way back to 2008, everyone seems to be interested in what happens in 2008. Listings peaked in April of 2008. What does that mean? I don't know. It means they peaked in April of 2008. So I wouldn't put a whole lot of, for those of you who are like, oh my gosh, listings have pulled back. What does it mean? Well, it means they pulled back, but they always tend to pull back somewhere in this area. This is why if you're in my business and you're looking to kind of have that spring and summer season, that spring and summer sales season is actually condensed quite a bit. So what does this mean if you're a buyer? If you're a buyer and you're looking for houses right now, the chances are probably pretty good you're actually going to see fewer properties on the market. Ugh, painful, I know. If you're a seller, in theory, you may actually have a little less competition. That could be good for you. The interesting part is we saw listings pull back a little bit. Someone might make an argument that with fewer listings and demand steady, that we would see an increase in price. We didn't see that. So we saw a pullback in price and a pullback in listings. So, I don't know. I don't necessarily know that I like that, but it is what it is. But again, not entirely unusual. Here's the 5-year chart on pendings, okay? I got my big red arrow down here that says pending sales were down, but I also have the word but. The reason I have but is because that's the one thing when I do this data, depending upon the time of the month I do it. For those of you that are really paying attention, if you go back and you take a look at last month's chart, I was like, wow, the pending listings kind of fell off. That would have been in the month of April. I probably was like, oh, geez, that's kind of painful, and that's not necessarily normal to see pending listings fall off that much in April. That's why I have this but here, because this actually is the April. And guess what? If you compare this chart to what I showed you guys last month, it doesn't look like that, okay? So there is a little bit of adjustment that goes on with this data. This data is truly one of these cases of garbage in, garbage out. If you have agents that are slow in putting their listings pending, active, closed, or whatever it happens to be in the MLS, this data gets shifted around a little bit. I'm a little surprised that it flattened as much as it did, because this basically shows whatever that is at LA County, and the green is Riverside. Basically, it shows last month that the pending sales were not that bad. They certainly were not as bad as I had said they were. But then again, what happens? But they're also all down again. It's almost identical to what we saw last month. So I'm going to have to take a little closer look at the data, maybe talk to Art Carter at CRMLS, because that's where this data comes from. This comes from CRMLS. Keep in mind, it's only as good as the agents that put it in. But bottom line, pending sales down. Here I go again. I got my violin out. I think my next chart might be a little easier to see. 20% fewer sales in LA, 18 in Orange, 12 in Riverside, 24 in San Bernardino. Ugh, painful. This is why, if you did watch the market forecast, and Chris Thornburg did his thing, which he does, and he basically says, hey guys, everything's fine, okay? And on a macro level, he's right. You look at this, you look at that, you look at that. The narrative is things are not fine, but the macro says everything is fine. So Dr. Thornburg kind of closed out his forecast with, take a deep breath, guys. The narrative may not be what you think it is. Everything's fine. Fair enough. My words, not his exactly. You can watch the video and you can hear exactly what he said. I came up at the end and said, you know what? Everything is not fine. It might be fine on that macro level, but if you are a real estate broker, operator, or maybe even an individual agent, negative 20, negative 18, negative 12, negative 24, well, that's not fine. Now, I have to be careful with my narrative because, well, what if I'm a homeowner, okay? Well, you don't really care how many houses sold. You're more concerned about that other chart that said, where are prices at? Well, prices were up 4%, 15%, 12%. Well, that sounds like you're fine, okay? And you very well may be. If you're a buyer, well, you may not be fine because interest rates are higher than you want them to be. So it's all relative depending upon what chair you're sitting at. So I suppose on a larger scale, yes, the economy is okay or fine. But certain segments of certainly the residential real estate market in Southern California aren't as nice and fine as we'd like them to be. So at any rate, so these are the pending sales. Here's the chart. I do have, I think, my next chart over. I did do this. So this is a pending sales. Again, I'm going to kind of do the same thing that I did with the others, but I just want to share with you, if you follow the pen, let me get this out of the way. Get that over. There we go. So this is our little EKG. Again, not fine. Do I feel fine? I don't feel fine. Why do I feel like I might have been happier when these numbers were at 5,000 pending sales a month in LA County, or 3,500 pending sales a month in Riverside, or whatever it happens to be, compared to 2,500 in LA County, compared to 1,800 in Riverside? That's where it's tough. If you're a broker, owner, operator, agent, this is difficult. These are the pending sales. I'm going to do the same thing, though, with this chart that I did with the listing chart. If I just look at the peaks, let's just go back. I don't even know what year this is. That looks like a peak right there. May of 2012. Sales at the maximum, and then they came down. Looks like the next peak is probably right around here, April of 2013, and then the sales came down. Looks like the next peak somewhere is right around here, May of 2014. So look at it. See how easy this is? This is why I follow the trends. I'll do one more. This is like kind of our all-time high. What's going on here? May of 2017, okay? That's why when you come to my stuff, I don't necessarily, I'm not going to forecast and try to predict the future, but I'm looking at the trends. And when I see a 15-year chart with pending sales peaking in May, I'll do one more. How about this one over here? What's this? May, okay? Shocking, okay? So then I come over here and I say, well, did we peak in April? Well, I don't know, because this is May. So this, if this chart holds true, then we will sit back and we will say, sales, buyers and sellers coming together in 2024 peaked in the month of April. I don't like it, but maybe that was 1 month sooner. So if you're doing some business planning and you're in my world, Maybe we sold the most houses we're going to sell in 2024 last month. We shall see, but there's your trend. So if you guys see any value in that, click on the charts, take a peek at it. So pending sales are down. They're down significantly. This is the chart I just looked at. You guys can click into that. Our Spotlight City is dark this month. I didn't pull one up. We'll get to that next month, get back on track. Okay, interest rates. We had a whole bunch of economic news came out today. I'm going to summarize it for you in about 15 seconds. Fed is not doing anything with interest rates today, which, by the way, today is June 12th. Had their Fed meeting today. Chairman Powell came out and said, we're not doing anything. Gave a little bit of a hint, a little bit of an indication of maybe one cut later in the year. Who knows? A few months ago, we were talking 3, 4, 5, 6 cuts. Now we're talking maybe one, maybe not. But this is basically a 6-month trend. Interest rates, for the most part, have been fairly flat. A lot of volatility coming up and down here, but for the most part, they're fairly flat. Right? What does that mean right now? That was Optimal Blue you were looking at. This is on the Google machine. I'm just going to look at the high end, 7.3. If you looked at the Optimal, it went very quickly, basically 7%. I think I'm going to pull these off. This is my one for the last 6 months. Mortgage News Daily. 10-year bonds down to 4.3. This is today. This is what it closed at today. 4.3009. That's important. And basically, the aggregate of 30-year fix is just under 7%. I didn't pull his slide, but if you want to see the slide from Chris Thornburg's presentation for Beacon Economics, he surprised me. He basically said rates are not going to get any better anytime soon. He didn't put an end date on that. But he's basically, Beacon and Chris Thornburg are forecasting a 7.6% 30-year fixed mortgage at the end of this year. That's a little higher than everybody else that I'm looking at. Let me rephrase that. That's a lot higher than everybody else I'm looking at. Having said that, all of the other guys that I've been quoting on video for the last 4, 5, 6 months, earlier in 2024, were projecting sub 6% interest rates. Sub 6, that's a 5 handle. None of those people are projecting interest rates that start with a 5. Most of them are in the mid to high 6s, and now they're trending above 7 or above. Beacon and Chris, they're at 7.6, so we'll keep a close eye on that. It's on his slide deck, which you guys have access to. So that's what we're doing with rates. Thank you for watching our June 2024 forecast. Have a great month, and we will see you in July.